Good evening. Welcome to Options Tender. You guys, sorry about the audio at the end of the video yesterday. I had about 5 minutes left. I looked up to press stop on the recorder and I noticed the mic wasn't picking up. But apparently the audio was available for the rest of the video. So the core point that I was trying to get across was all available on yesterday's video. The last part of it was more on the 65-minute, looking for what to look for today. And we're going to talk about that. We're going to focus a lot on the 65-minute going on SPY and QQQ. And we'll check out some indicators. But first, I wanted to also give you the point of view from the Elliott wave structure that I'm looking at on NDX. And we'll go fairly quickly from the monthly all the way down to the 65 and show you what I'm looking for, again, going into the next couple days. So this is a short trading week. We have 3 days left, and I don't think there's going to be a whole lot of action until possibly Friday. So we'll talk about the weekly kind of seasonality as well. I mention it every once in a while, and we'll mention that at the end of the video, and then we'll check out VIX. All right, so if you're new here, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. And thank you for all the likes. Please like the video. That helps us get this channel growing, get this information out to as many traders as we possibly can. And I have been so fortunate that you guys have been helping me out so much. So thank you so much. Now let's get into it. We have NDX on the monthly time frame, and just to kind of match up with what's going on, this is the 2000 bubble with what SPX had. I labeled this 3. We don't have a whole lot of information past the 90s, clearly because of tech, and so I labeled this as a 3-4. All right, so that would match similar to SPX. The 4 was over here where we made a lower low on SPX, but here we had the low here, and we made a higher low for a 1-2. Now we're looking at the wave 3, impulsive wave 3 with the extension, pull back to wave 4 at the 382 retracement. And I know that I'm measuring it down from the bottom of 4, but even when I move it up to the wave 2, the length of wave 3, the 382 doesn't really change that much. We still came and tagged it. So this is a very valid wave 4 here. And different from the SPX, we have a wave 5 over here. And this is if we ended up getting a all-time high on SPX, which we did not yet, then I would change the label to this. But right now, I think that, and I'll show you what, as we go down to the lower time frames, how I think this will match up with what the SPX is doing. All right, so we had our 3, 4, 5 all-time high for a possible wave 1. All right, so we're possibly starting a wave 1, and then we want to look for the retracement back to the 62%, or possibly even lower. But we want to get there first before we look. Either one are valid, very valid supports, form of resistance. Also here would be the top of the tech bubble down at the 786 if price action wants to go a little bit lower. And I think that would be, structurally, I think that would be what price action does, because we want to test the breakout. You had a high here, and much, much later in time, some 20 years later, you had a test of the highs and then a breakout. So that breakout and then a back test would be very, very telling. That'd be a wonderful buying experience, an objective buy there for a very, very long time, in my opinion. Now, with this wave 5 up here, we had a peak at the wave 3, and now we have negative divergence. So we want that negative divergence to play out and get us down to the 62 or possibly the 78.6. So that's what we're looking for long term. But what are we looking for in structure? I think we're going to look for a zigzag. It's very common in a wave 2. You can have a flat, and that's what I think the SPX is doing. I think the SPX has a high here, and it's going A, B, C. All right, the larger structure, A, B, C. And then with the NDX, I do believe that we're going to get a 5, 3, 5 in for a zigzag, which would clearly follow the path of the SPX as well, because we're looking for 5-wave move down in SPX and on the NASDAQ. Then we're going to look for a bounce for wave B in the SPX, and we'll be looking for a bounce in a wave B on NDX. So it still matches. And then the last move, after a 62% retracement, and I showed you that 62% retracement on SPX, so check out the video, and then another massive 5-wave move to the downside. So everything fits together. We're looking for that deep retracement, possibly all the way down to the 2000 bubble high. And again, that would be a generational buy, in my opinion, and all hell would have broken loose by the time this all happens, and everybody would be pulling their money out, and this is actually a great buying opportunity. I don't know which level, at the 7,000 or at the 4,250. I know that's a huge area, but we'll have to watch the price. We'll have to watch our indicators. We'll have to see what happens. Okay, so let's go down to the weekly, and now we can speed up a little bit on this. That's the main point that I want to get across in conjunction with yesterday's video. And here's a better view of it. We have our 3, 4, 5, and we're looking at an A, B, back up to that 23.6, and that would be a nice deep retracement, and a C all the way down to that 72, possibly if price action gets real dirty, down to that 786. Let's go to the daily. Trend is our friend, and I hope you noticed on those Elliott, on the Elliott indicator that I introduced yesterday, that we had those divergences, not only on the monthly, but also on that weekly, a deep weekly negative divergence, and also here we made our divergence on the highs. When we made highs here, and we had a negative divergence on the daily as well. I didn't update this thing here, so don't look at all those. It's just not updated. So we had our ending here, and now we're moving down. The important thing is to look at this next one on the 65-minute. And what we have here is we had our 5-wave impulsive move for the ending of wave 5. And now what we're looking for here is a possible 1, 2, 3, 4, 5-wave impulse move. I wasn't sure if this top is good, which I do think it is now that we have a 5-wave move down. I was not sure if this was a 1, 2, 1, 2 setup until the indicators started to, on the 65-minute, started to get a little bit, I guess, weak on the downside. So we had positive divergence, and that's what I'll show you on the SPY and QQQ. So that's our structure. I do think we have our impulse move here, so we possibly correct tomorrow into Thursday. And when we talk about our seasonality, now that if this top is good, now our seasonality is going to typically be to where Friday will be bearish into Monday, and you saw that we're on turnaround Tuesday here, so we're getting a little bit more bullish into Wednesday. Wednesday is going to be whips. We call it Whipsaw Wednesday. So we could get our AB, pullback AB, start correcting, and going into Thursday. Thursday is typically in a bearish scenario, in a bear market. Thursday is typically your bull day. Okay, so we might see a little bit of strength into Thursday, and this is just a seasonality. This how the wind blows. You know, if you're sailing against the wind, it's a little bit harder to move. Okay, it doesn't mean that that's what happens every single time. Now on Friday we should see a pretty bearish day, in my opinion, with the seasonality. Perhaps this is a 1-2 setup. And then maybe we get weak Thursday, it in the end of the session. But overall, Friday should be bearish, and then Monday should be a follow through for what Friday does. Then that turnaround Tuesday typically is a good place for a bounce. But in general, we're looking at this impulse wave being done. We're already setting lower highs and lower lows, so this still technically could be a 1-2 1-2 1-2 here. It just doesn't seem that way with the indicators. We'll see. We have some data coming out, the ISM tomorrow at 10 a.m. Okay, so let's go over to, let's just shrink this. Let's go over to SPY. And we'll start off with the daily time frame, but we'll focus more on the 65. So let's check out the trend as our friend here. Now notice we're back into this chop zone. This was a big area where we consider a fake break at the 473 area, and we have a little bit. It's kind of at this whole zone here that we actually got a doji off of, but you see we're back into that chop zone, so it's natural to test the bottom of the top of the chop zone. That's the range. Fake break, it may even be a little bit more bearish than that, but we're looking for the test of the bottom of the zone, about 462 there. At that bottom of the zone, we also have, let me put the moving averages on. We broke underneath that 8 EMA. That's the most important part of this chart. That's our trending indicator. So we may go up to test. We don't have to get above it, even if we do start the day going Wednesday into Thursday. If we start to get above it and break back down, maybe we close that gap and then break back down, that would be very bearish. So that's our trending indicator. Technically it's sideways at this point, but we're underneath it. It starts to curl down. We'll be looking for the momentum to start increasing to the downside. We're not going to look at indicators here. That's that was our most important thing to look at. So let's go ahead and get down to that 65 minute. We're also in the middle of that chop zone there, if you noticed. So we're in the middle. We have the support here, once resistance, and then we have a little bit more support down low in the daily time frame. All right, on the 65. In the 65, we had this wedge forming. You hold on to that primary wedge, and we broke down from it, giving us a sell signal. That was last Wednesday. And then we started to grind to the upside. We did not make all-time highs. All-time highs is right here, just above 480, or just below, excuse me, by a couple pennies below 480. And we drew another trend line that we broke down from, which gave us our secondary sell signal. And now I do believe this move is over. We do need confirmation on this low here on Wednesday, around the 467, let's see, 470.28. So that will be our point where our confirmation that we broke this low. And the reason why is because, like I was talking about yesterday, I guess you didn't hear it, is because this is a 5-wave move. We're counting this as a 5-wave move to end this entire move, or an extension. I wanted to warn about an extension, meaning that this, yes, could be wave 5, but it's also an impulse wave, so it could be another 1, 2, just like we were talking about on that higher time frame in the monthly that we're looking for. So this could be a possible 1, 2, because we're holding the lows there, and then we move higher. Well, Qs, we'll go over to the Qs. They actually broke that low. So we have our confirmation on the Qs. Perhaps IWM, they did not, the small caps did not break this low. Perhaps IWM and the Dow push price up to get this all-time high. That's a possibility, but I think this high is good. I think we have 5 waves in here, and I think we're ready to bounce a little bit, maybe possibly close the gap and form some sort of maybe head and shoulders pattern and start heading down lower from there going into next week. Now, again, the volume's not all the way back yet, so the rest of this week may not be intense, but I will heed warning that Friday may be pretty bearish. Now, we do have catalysts going on. It's a huge data dump every single day, Wednesday, Thursday, and Friday, so at any point, we could get real trendy to the downside. So be careful about that. Here's that 458 for this time frame. That looks to be a really good support area, at least for a slight bounce. If not, we have a whole zone here. So, but this looks like it's going to be a pretty easy volume gap to get through if we start to break down. All right, let's move over to the Qs. Just on the 65, because we already saw all of NDX. I just want to give you a point of view from the traditional technical analysis point of view. And so we had this rising wedge, just like we did in SPY. And we did make all-time highs. And now we broke underneath this low here. We broke the trend that we had. And let me point out that here's how the trend line was drawn before, because we had a low here. We had a fake break and brought price action back above there, and then price kept trying to climb there. So it's always nice to kind of keep your trend line in the same spot. I know that we do move trend lines. Once you make new highs, it's valid to make new trend lines at the low points here. And that's just as fine. And I do have a video on trend lines as well. It doesn't go that in depth about how you move, but it does give you an idea of, so if you start to make new highs, kind of move that trend line here, and we broke down from it, back tested, and continued down here. Now, again, it looks like a 1, 2, 3, 4, 5 impulsive wave move down. Could extend a little bit further, but I do believe with the, let's go on this. Okay, so with our 65-minute indicators, you see that price action brought the indicators all the way down into oversold areas. On the reversal, Williams R%, and on the RSI, momentum still heading down, which that's expected. But now we have bullish divergence here on the RSI, and that's on SPY as well. So that's why we wanted to make sure that we showed you that's not the time to get bearish. We do have our puts longer term. We even rolled some out from this week, and all I have for this week now is just a couple of calls on SPY and QQQ in order to hedge a bounce here, and I would look to turn those hedges around somewhere up in the 62% retracement, 50-60% retracement, and turn those around, and we'll probably see some sort of gap fill or partial gap fill to head lower. So I'll turn those into those gainers into puts. And if price action continues to go lower from here, perhaps because of the catalyst, then we're still making money anyway. So just protecting just for a small bounce. If you want to see, we can use our retracement tool from the top here. Add a drawing, retracement from the top onto where possible ending in this this 5-wave move is. And you see the 62% is retracement is at that 408, and if we close the gap, we go up to that 786 area, and that's the zone we'll be looking for to take off our hedges. All right, let's go over to the VIX. Check my mic. Yep, we still got volume on it. All right, so we have the VIX here. We broke out from this falling wedge. After let me start back here. We broke down from this larger wedge here to get us a bearish move, which gave us lows into extreme complacency down in this 12 area, and we formed another wedge. Now we broke out of that wedge, pulled back, and now we're kind of consolidating or triangulating, however you want to say it. And so there's two things we're going to look at, because 13 is a good support resistance area. We have this gap here. We filled about half of the gap If we start to break down from 13, you know that price action is starting to head higher on the market, and that you're pretty good to be long underneath 13, at least for a little bit. I'm not looking to go long, just with the hedges, perhaps. And maybe we close this gap while the market's bouncing into tomorrow, if it does so. Now, if we close that gap, I'll be looking again to start getting a little bit more aggressive long, especially when we start breaking out of this consolidation area. Now, in the future, what's going to happen if we start breaking to the upside? This is a bullish falling wedge. We break up. Are we just testing? We've talked about this over and over. Are we just back testing this wedge? I don't think so, but it's possible we just back test this wedge to 19. We continue lower. We make all-time highs, blah, blah, blah. I do think that this is looking to make a much larger move. And I think this, let me show you on the daily. And I think we're going to test that 19 area, which would be the channel, that falling channel resistance. And we start to break off from there, and goodbye market. And I think this, our next stop in months ahead would be that 35 area, and then much higher after that. All right. What else did I say I want to show you? I think that's what I want to get across. Let me know. I'm thinking about starting a separate video for Bitcoin. So I don't trade any cryptos, but I do I trade Bitto every once in a while, the ETF for Bitcoin. But just let me know if that would help out, if you want me to do that. Otherwise, I'll just continue doing the major market, and once in a while hitting some individual stocks up. And I was looking at Tesla today. Tesla started to break down a little bit, but it's just back testing so far. And at the same time, I'm not sure that any of these actually hold. It does appear that we have our 1, 2, 3, 4, 5 wave move down. But just to go along with the market, I do believe this gets a retracement as well. So with an A, B, and then an impulse C up here to backtest or to retrace, and then lower as well if it follows along with the market. So that's a little bonus there. I believe that's all we had. I'm trying to think. Don't want to make this too long. All right, we got the VIX. We got everything. Well, one thing to pay attention to would be the dollar. With this falling wedge, the dollar seems that it wants to break out. With the dollar moving higher, I do believe they'll bring the market down. That's what the correlation has been so far. And we talked about rates. I'll put it at the end of the video. Rates, I do believe we're still in the same kind of correlation with the market going down when rates are going up. So if the rates start to break out, I do think the market's going to head lower. But there's going to eventually be a time when the market's going to sync up with rates, and the rates are going to start falling because the economy will be coming to a grind, and rates will start falling, and the market will start falling. I don't think we're ready for that yet. I think we're still going to be in the inverse correlation here. So that's what I got for you. You guys, thanks again for liking all the videos and all the support. We'll talk to you soon. Have a good day. We'll talk to you tomorrow.